Hi, I'm Jimmy. In this video, I'm going to walk through the 9 investments that I would buy if I was just starting out in investing. Now, in my last video, I said that I was going to do my top 3 favorites in this video, but depending on what our investment goals are or our investment style is, there's different types of investments that could serve individual investors. So instead, what I've done is I've selected my top 3 favorite ETFs, top 3 long-term buy and hold stocks, and top 3 dividend stocks, all geared towards the new investor. But because there are so many potential investments in this video, I plan on running through them at a somewhat quicker pace. So if there are any companies or ETFs that I mention in this video that you think deserve a deeper dive, please let me know in the comments below. And while you're down there, perhaps you could hit the thumbs up and hit the subscribe button, as well as the bell icon for notifications. Okay, let's get rolling. So let's start with the top 3 ETFs for beginners. Now, I think ETFs are a great place to start if you're just beginning in investing because they come with built-in diversification, at least the ones that I like to. So the first one is the Vanguard S&P 500 ETF, ticker symbol VOO. I know this is somewhat of a boring pick for an ETF. It's something that just tracks the S&P 500. But if I knew nothing about investing, this would be the first place I started. They have a great fee at just 3 basis points. And just so we're all on the same page, a basis point is the same as 1/100th of 1%. So for every $100 that we invest in VOO, they take 3 cents. Now this ETF also has a dividend yield of slightly less than 2%, which isn't too bad either. Now, another option along these same lines is SPY over VOO. And SPY is good. They do pretty much the exact same thing. They do have a higher fee. They usually they charge 9.5 basis points compared to VOO's 3 basis points. But oftentimes with SPY, they offer a bit more liquidity when it comes to options. So if options are something that you're interested in, you might consider SPY as a replacement for this one. Okay, up next, I've got a dividend ETF that's great for beginners if you like dividends. And that's the ProShares Dividend Aristocrats ETF, ticker symbol NOBL. NOBL invests in mostly large cap companies, but their real thing is that they only invest in companies that have consistently increased their dividends over a long period of time. They have a fee of 35 basis points, and their current dividend yield is right around 2%. Now, some people may make the case that 35 basis points is too high for a new investor, and maybe that's true. So if we don't want to pay 35 basis points, then we could go with an ETF like the Vanguard High Dividend ETF, ticker symbol VYM. VYM has a fee of just 6 basis points, and they even have a better dividend yield of about 3%. Now, we may ask, why go with NOBL if VYM has a lower fee and a better dividend yield? And the answer is really in performance. So this is a table of NOBL compared to VYM. And as you can see, at least as of now, NOBL has outperformed VYM fairly consistently. And this is after fees and this assumes we reinvest all the dividends we get back into the ETF. So either way, both are very good and you could go with either. Personally, I just prefer NOBL. Okay, our third and final ETF for beginners is the iShares Core US Aggregate Bond ETF, ticker symbol AGG. AGG charges a fee of 5 basis points and they have a dividend yield of a bit short of 3%. Now, this ETF invests in a ton of different bonds, and with all the talk of the stock market potentially crashing, I think this is a great and frankly somewhat necessary piece for most beginning investors. Okay, now let's shift over to the top 3 long-term buy and hold stocks for beginners. Okay, so first up we have Microsoft, ticker symbol MSFT. Microsoft is one of my personal favorite stocks, and if I was just starting out, Microsoft would be one of the first stocks after ETFs that I got involved in. I like them because they have decent growth, they have good margins, and they have a very, very strong balance sheet. They have more cash right now than they have debt, which is impressive. So I think that they have a long-term place in business in general. I think they're going to do well over the long run. Okay, so that's good. Up next, we have Boeing, ticker symbol BA. Now, I like Boeing because they're one of the few aircraft manufacturers in the world. And just like Microsoft, they're unlikely to go anywhere for at least the foreseeable future, call it the next decade or so. Now, they have run into some issues lately, as I'm sure we've all seen some of the issues that they had that led to some plane crashes. And with that being said, they do have a fairly strong balance sheet, and I would expect their revenue to pick up growth again after all these recent issues are sorted out. Now, Boeing stock is likely to move higher over the long run because I would expect for their revenue and earnings per share to continue to grow. Plus, they have a dividend yield of a bit more than 2%, so that's always nice. Okay, our final buy and hold stock for new investors is Alphabet, also known as Google. Now, Google is another one of those companies that have a great balance sheet, and once again, they have more cash than they have debt, and they're likely to be around for quite a long time, and they're likely to do well for a long time. Now, one drawback to buying Google's stock is that the shares are going for about $1,200 each right now. So if we have a broker that lets us buy partial shares, well, that could work out great. But if not, $1,200 per share might be a bit much to ask. If we don't like that, a backup company to these three would be a company like Disney, ticker symbol DIS. I think Disney's another great company. They're stable. They have a good, strong balance sheet. They should be around for a while, and they're trading at about $130 a share. Okay, now we shift over to the three best dividend stocks for new investors. Okay, the first one is AT&T, ticker symbol T. Now, a lot of people love AT&T because it currently pays a dividend of about 5.5%. Now, we definitely could not have this on the buy and hold list since AT&T has a ton of debt and they will have that for a while. And I've actually done videos on AT&T, and I've done a video specifically on AT&T's debt. There's links in the description below if you're interested in seeing those. But if dividends are something that we're after, well, I would expect for AT&T to be able to maintain their dividend and continue to grow it as they have. And I do expect the stock to be a bit more volatile than some of the other ones we've talked about. But overall, I think they will be able to continue to pay their dividends. So if that's what we're after, that's the reason that one's on this list. Okay, our second dividend stock is Colgate-Palmolive, ticker symbol CL. Colgate sells many products that should continue to sell rather consistently no matter what happens with the economy. Things like toothpaste, toothbrushes, soaps, shampoos, deodorants, things along those lines. Plus, Colgate has a dividend yield of about 2.5%, which should help appeal to the dividend crowd. So even if the stock market were to crash, I would expect for Colgate to remain fairly defensive. Sure, it'll go down, but I would expect it to go down less than the overall market. Okay, our third dividend stock for beginners is another defensive company that I think could serve us well even in a market downturn, and that's Bristol Myers Squibb, ticker symbol BMY. BMY is a global biopharmaceutical company, and they have a dividend yield of a bit more than 3%. So they can be a bit volatile from time to time since there's a lot of competition in that space, and they tend to be highly regulated. But from an investing standpoint, they're likely to keep growing at a somewhat steady pace, and I would expect for their dividend to remain fairly consistent. Okay, so those are the 9 stocks that I think are well suited for new investors, or at least a combination of these ones. But what do you think? Are there any companies that are not on this list that you think would serve new investors well? And if you are a new investor, are there stocks that you're considering investing in that I didn't mention here? Please let me know what you think in the comments below. If you haven't done so yet, hit the thumbs up, hit the subscribe button, hit that bell so you can get notifications whenever we issue a new video. Thank you for sticking with me all the way to the end of the video. I'll see you in the next video. Thanks.